So step 3 to upgrading your management accounts is structure. So hi everyone, my name's Alicia and I am currently doing a mini series on how to upgrade your management accounts. If you are an accountant or finance professional and you don't understand why you'd want to do that, then check out a link below. I've did a video on how why would you want to upgrade your management accounts? Essentially, it establishes who you are as a finance function and helps to establish you personally as a finance leader. So this is step 3. We're going to go through structure. Step 1 and step 2 were primarily around preparation. So if you haven't seen either of those either, I would recommend you to watch them first. Again, I'll link below all of those videos. So structure. What does that mean? So what you want is the financial statements that are included in your monthly management accounts. You want them to have the right structure. You want them to be readable and digestible. And I would say digestible is probably one of the biggest things. You want it to be simple and easy to understand. And you want to be able to tell the reader quite quickly about what is going on in the business. So if you're working for a small business, a fast growth business, a startup business, more likely than not, you're using one of the smaller general ledger packages like Xero, QuickBooks, or even Sage or MYOB. So they're probably the most common ones. There's obviously others, but they're the most common ones. You're probably not using NetSuite, Oracle, SAP, one of those larger general ledgers. And the reason why that's important to identify first is because when you're working with one of those larger ones, you have to put the structure in first and it's built around that. But with these smaller general ledgers, there's already a P&L structure in place, which is why it's so quick and easy to start using them. But of course, if you use these defaults, then your P&L is going to be pretty boring. So I've just typed up an example here of what it kind of looks like if you just export a P&L. So this is from my blog, and I wrote about structure in the management accounts and how boring it could be. So this is what a Xero one would look like. So you would just have revenue, often in alphabetical order, and then it would always include interest income within revenue, which generally went down the bottom. It would have direct costs, just if you haven't added any accounts, that's about it. You'd have your gross profit, there'd be no margins, and then everything else is underneath in alphabetical order. And for me personally, seeing bank fees right underneath advertising and marketing, I'm such an accountant, but but it just doesn't look right, and it drives me crazy. So, and then you've got depreciation, then employee social costs. It's just everything in alphabetical order, and then at the bottom you get net profit and loss, and that's it. So you can't. There's no subtotals. There's no contribution margin. There's no margins. There's no summary. You would never share. I mean, maybe you do, but that's fine. But if you wanted to upgrade your management accounts, you absolutely would need to upgrade the structure of your P&L. So a good place to start is to have a look at the commercial deck that founders give to investors or are used for key suppliers or the board team or anything that goes externally and it talks about the business. So having a look at what the story is around the business. So how do they make money? What are the different revenue streams? What are the direct costs associated with those? What are the gross margins that they think that they're getting? What can they get investment for in order to drive the revenue? And what are kind of, often they don't talk about OPEX, but depending on the size of the business, if they're larger, they'll talk about business. And essentially you want your P&L to mirror that story. So you want all of the revenue streams within revenue. You want your cost of sales to be exactly the same, so you can see the profitability of the different revenue streams. You then want the variable costs that the business can invest in order to drive revenue, which generally is your marketing costs. And or sales costs as well, sometimes even technology, depending on the business. And then all of your operating costs should be summarized into 5 headings, which is generally people costs, professional fees, tech costs, say travel and entertainment, and office and administration. And that's it. You don't need to see the detail. The detail you can show separately, but most people would just want to see the highlights. And then obviously underneath that, then you'd have your depreciation and interest expenses and all of your other, FX, all of the other type of costs that you don't want to include within operations. So you would basically, it's a good idea to sit down with the founder with a proposal of how you would structure the P&L. And then once you've agreed a structure, you could then take that into your general ledger and you could customize it within your general ledger. So I know, for example, with Xero, you can customize your P&L to have as many subtotals as you want and move things around as much as you want. And no doubt the other general ledgers are the same. If not, export, shuffle around in Excel. But essentially, you want the structure to be readable and digestible. There are other ways that you can look at the columns as well. I'll go through this in detail another time. I also go through that in detail in the management accounting course that I have. But essentially, you really need to think about the way that the balance sheet, the P&L, and the cash flow are reported to everybody. And then once you're happy with that, structure it and be consistent then going forward. Okay, so that is the structure. In the next video, I'll go through software.